Now that we've kind of covered a lot of topics, some of these sessions will be pure questions and answers. And then if I happen to place a trade that day and want to, if I am able to take the time to document it or if there's anything interesting about it in terms of how to set it up in a brokerage, I might um, sort of, have a little presentation for the first 5 or 10 minutes. But we can also just jump straight into questions. I did have a little trade today, which was, I don't think I've documented a trade where you're putting stops and limits in inside of Thinkorswim or a different platform. So I did have a little trade there today. Some days we'll have them, some days we won't. But yeah, so I can jump into that. That'll just take probably 5-8 minutes. And then I have a hard stop today at 12:40 my time. So in about 40 minutes, I'll need to be off of this, but we can keep them kind of nice and short and try to do them pretty often. Okay. Let's see. Okay, we have a few questions coming in. That's great. Feel free to flow your questions in. I have a quick slide deck I can go through very fast, and then we'll kind of jump into questions. Okay, jump into the disclaimers. This is not solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investments in light of your financial condition. Okay. Great. I'm Jason Hitchings. I'm the CTO, and I'm just gonna I did a little CMG trade today in Chipotle, which I'll just kind of run through. There's nothing too special about it. If you click that little button at the top of the Today tab for the largest 500, it's gonna limit your, this tickers that are shown to things that are typically pretty liquid in the options market. So I think, unless you're really looking for kind of smaller stocks, it's a pretty good starting place. I just looked through a couple of them. I saw this, 6-0 pre-earnings diagonal, thought it looked pretty good. So the new feature that's coming out really speeds things up. And so I just clicked show options and it gives this little warning saying, hey, this isn't a recommendation, like check with your brokerage to make sure all the data is accurate. I click OK, and then it shows me the actual strike that if I want to trade it, that this position would use. And so it said for the Feb 23s, you'd use the 2380 calls for Chipotle. So that speeds things up. You should definitely double check it, but this is, shows verified earnings. The technical conditions, you can check on the charts just the way we've done the last many times, but this is a new feature that we're testing. The promise of it is that it will do all of that checking for you at least within the data that we have visibility into in that moment. So I just did the web version of Thinkorswim again. I wanted the February 23, which is kind of scrolled out of view here, but I came down and looked for the 40 delta, which is this column. And it's this line right here on the calls, it's 2380. We can see the markets are, about 51 at 57-ish. It's $6 wide, so that seems like something, but Chipotle is trading at 2,350 or something. It's not. It's basically trading at like 510 at 570, which is pretty tight. I still got greedy. I refused to pay the offer price on my long call, but I did see that the delta is 40, so it agreed with what our options chain from the CBOE said. It said the 40 delta was the 2380s, and so Thinkorswim agrees with that, which is nice. It says our next earnings is 2.6, and it said trade. If you're looking for a 30-day call, then you want to trade something around Feb 23, which makes sense because it's January 23 right now. It's all pretty logical. Yeah, so I just clicked the offer here and it populated this. It showed the bid and ask spread. Um, you know, it's interesting with this bid and ask. On the one hand, it's from a percentage perspective, it's relatively tight, maybe 7%, separates these two or something like that. Um, on the other hand, I know there's a lot of algorithmic trading that people are happy to they'll try to make a dime, so they're making $10. They'll try to do that a million times a day. And so I felt that even though these are reasonably tight, that there's probably a lot of algorithms out there that'll happily make $5 or $10 off my trade. That's plenty for their like micro commissions that they pay. So I started just placing bids, placing in, putting in an off or putting in, trying to buy it at the, pretty aggressive price to sort of be on the bid. So I started putting in my bid and I was pretty much the best bid. Just scooted it up a little bit. I let it sit for a minute. You can see that the markets now reflect, my buying price. I ticked it up $1. I let it sit for a minute or two, ticked it up $1. I didn't want to wait for the stock to move around so much. I just wanted to see if there's hidden liquidity, which oftentimes there is. But I just kind of inched my buy price up slightly over time. Um, I but you have to kind of like remember what your midpoint is, because when I put in my bid for 52.80, it shifted the markets. The markets went from the market's bid price was 51.40. Once I put my buy in at 52 or for 52.80, then it started ticking up a little bit. So the midpoint starts to shift, and all of a sudden you forget, like, where was this before I started influencing it? Because that's if I'm trying to, people are using volatility to price this thing. They're putting a bid ask spread around it. They have a volatility assumption like 36% or something like that for the volatility in the next month. And then they put a spread around it. But oftentimes they're willing to take much less than that spread. And so really I wanted to be around midpoint or just a few, maybe a nickel over it or something like that. So I was just slowly moving through this thing. The market's starting to change now as my bid is in there. Let's see. And then as I slowly kind of tick this thing up, I end up getting filled at 54.80. I just kind of go up $1, up $1, up $1. But it was pretty good compared to where the market started, which was, about 51 at 59. I got filled pretty much at midpoint. So to me, it was worth a couple minutes of just experimenting to see if there's any hidden liquidity there. And you can see that the P&L, it says that I'm down $5 and it's pricing that against the midpoint. So on a $5,000 position, it's saying I lost $5 of edge. So that's great because that's like whatever, 0.1% or something. So basically I get midpoint fill. So that was nice to see. And then someone asked last week about, hey, is there a chart of what your P&L looks like at various price points? Because I kind of did it manually with like the delta or how much my position would move. So I just wanted to highlight this real quick. So they have this little chart that shows your profit and loss over time at various price points. So this is the 23.80 call, and it's basically saying, you make money as it goes up, you lose money as it goes down. So, but these green and red areas are basically at expiration, and this blue dotted line is on any given day, because it's not, this is basically the difference here. If it jumped up, this is 27.13. They're not showing a lot of sort of price points along this chart. But if it jumped up $100, then this difference between the intrinsic, which is the green line, and the blue is kind of the time value that would be left in it. And you can see that this distance is greatest, the difference between the real value on the day of the option and the intrinsic value, which is what's left here on expiration day. On expiration day, all that's left is the intrinsic. But you can see that it's fattest around the at the money prices. When wherever stock is right now, 23.40 or something like that, that's where the distance between today's value of the option and the intrinsic is largest, because that's where you have the most potential up and down movement, and that's what makes the option have value above its intrinsic value. As this thing goes up, you see that these two differences narrow in terms of sort of the time value that's left, the difference between the time, the premium in the option versus the intrinsic value. So I just advanced this calendar forward. This thing would be expiring Feb 23rd. And so this would be about a week out from expiration. You can see that this blue line is hugging the intrinsic a lot more closely. You can see that up here, there's basically no time value left because this thing's going to basically move like stock at this point. Every time that this thing goes up, you're going to capture the value. Every time it goes down, you're going to lose the value. The chance of something happening where this thing is not in the money if stock is up here at 50 or 2600 or something is very small. Likewise on the downside. But yeah, so this is, and you can hover over it. I think there's tooltips on this. So yeah, people were asking about what's a way to kind of see where how the position changes over time. So I thought I'd just highlight that for a moment. This particular trade, the way that we've set it up, and you should absolutely experiment with it and figure out what works best for you. But and again, I put this trade in today kind of partially for my own trading account, but partially just to create an example that we could talk about. It is not a recommendation. You should only trade it if you want to. Please, don't just do it just because I did it. But yeah, so the gains and losses, the way that TradeMachine has it set up, are plus or minus 40%. And so that would be about $21. And so up or down $21 would be the stop and the limit that I would place in it. And so I started by putting in a limit order. I said good till canceled, which is important because otherwise, it's not going to reach, very, very, very unlikely that option's going to be worth $72 by the end of the day. So I put in a good till canceled and put in my limit, and then I just let that thing sit in my working. It says that it's, it'll sell that thing as soon as it reaches $70.72. Did the same thing on the stop. Depending on your brokerage, they may or may not let you enter a stop and a limit at the same time, because in their mind that you might get limited out of the position and then be double short if you also hit the stop. It's because it says good till cancel. There's ways to place contingent orders, but different brokerages are different in terms of how they do that. So it's possible you can't put both of these in at once, because this would be a $200,000 stock position if I was ended up naked short a bunch of stock. Is how they're viewing it from a risk perspective. So we put the stops and the limits in, and then this earnings trade, you'd want to close one day before earnings. Earnings is on the 6th of February. And so I put in my days before earnings. I put a link to this position in there and I say close one day before earnings, and I tell it to notify me with email and text when it comes in. And that's about that trade. So far, it's done fine. Technically, TradeMachine would, if you're going to really follow the TradeMachine, you would wait till the end of the day because it uses end of day trades. Practically speaking, if I have a window to trade of 20 minutes in a day, I will just place my orders at that point. As long as, if it's like the stock has to be over the 50-day moving average or something, if it's just barely over, I might not place a trade or I might wait. But if all the conditions are being met with lots of room to spare, I personally oftentimes, just purely out of practicality and just so I can organize my day better, I frequently just place the trade in that moment, rather than trying to come back, in the last 15 minutes of the day or something. Yeah, so that was just a real quick walkthrough of a simple call with a stop and a limit. And from there, we will jump into some Q&A.
So Jason, what would you do if at the end of the day, 3:45, you had another 5 minutes to look at the market and CMG had dropped below the 50 SMA? Would you leave the trade on or would you close it?
I if it was close to it, I wouldn't put it. So I just want to start off with that. If it was only 10 cents above or something like that, I wouldn't mess. I would wait till the end of the day. I wouldn't mess with it. Yeah, in that scenario, because I'm long a call, personally, if the stock had come down a bit and now I have a small loss, I have a mentality of always trying to lock in winners. So I probably would just hang on to it and try to make the best of the situation. I might be a little more inclined to exit early. Like if I woke up the next morning and it was up 5%, I might just be like, okay, good enough. Like this wasn't exactly the trade I wanted to get into. I probably wouldn't personally lock in a loss of $100 or $200, based off of that. But that's just completely a matter of one's own taste.
Okay.
But
Just-
to really stick with the tried and true back testing methods, like waiting to the end of the day is best. It's pretty rare. Again, if the technicals are close, I'll wait. But if it's way above the 50-day moving average, I'll just I'll sometimes I'll just take the trade.
Gotcha. Uh, I would just add, while we're talking about CMG, in community today, we've been talking about the CMG 14 days before earnings and looking at alternatives like instead of just doing a long call, since it's a $2,300 stock, um, checking out a long call spread.
Yeah, I was gonna say, like, if it was down a little bit in that circumstance, I might be inclined to sell a higher strike call,
Right,
just to kind of give myself a bigger margin of
right.
error.
And it also appears under the Today tab for the long call diagonal.
Yeah, I
And
saw that. I
long
think it was a 3-1. The winning percentage
Yes,
wasn't as good.
yes, yeah, 3-1 with AI, 4-2 just with using the 50-day, above the 50-day.
Yeah.
Um,
I think the
so
total return was like under, it was like, I don't know, in the 60s or 70s or something like that. Yeah, the other one was 6-0 with like, I think the average trade return was a bit better. Wasn't
yes,
hugely different, but yeah, I chose to take just the straight up
but
call.
if anybody wants a smaller trade, like
Yeah,
probably I'll be looking at, the long call spread has very good results, and also 6-0. So,
great,
and I posted it in community. I posted the back testing community, so you can check it out.
great.
Okay.
Yeah, because
I
it is a pretty expensive, just to do a single leg is $5,000. So
Right,
it's not a cheap one to get into.
right. So you can reduce your risk and you can reduce your buying power by making a long call spread out of it. Um, and there are multiple different possibilities. My back test includes 5 different possibilities for that spread. So I start by welcoming everybody, and I also apologize to any Cowboy fans or Philadelphia Eagle fans who might be upset with my New York Giant cap, but I
Hmm.
got to keep the head warm. Um, Yesterday, when I clicked open to trade from the Today tab, there was a small banner appearing under the trade box that Jason just showed when he was talking
Yeah.
about the CMG trade, telling if the trade was valid with a date timestamp. Today it's gone. I had a ton of questions about it, but it's gone now. Will it be back soon?
Yeah, it will be there soon. Yeah, we just kind of published out to our production environment. And once it's out in the production environment, then we have to add the permissions. And so it went to production and it was briefly available to everyone until we permissioned it down. Right now, you're not really missing anything. It's only available to admins. We put it in production so that our team can see it and play with it a little bit more. Yeah, it was out there. Normally we can do that pretty fast where we publish to production and then permission it like within like 10 minutes or 15 minutes, but it was out there for an hour or two just because of the way the day unfolded. So yeah, it was a little sneak peek. So yeah, the we have to figure out, so that data, it will definitely be released. We're going to release to platinum members first. The reason being that it's a pretty expensive data feed to access the live options data, and we want to get a little bit of a sense of how much it's going to cost us. We don't want to take a bath on it. And platinum users, as everyone knows, because they pay us a year ahead of time, we can just kind of like, it just helps us in a lot of ways. So it will be available very soon to platinum users, and if the cost of it's not outrageous, then we'll release it shortly thereafter to standard users. We don't know if all of a sudden people are going to start backtesting live things like 20 times as often, and so it's a little hard for us to estimate until we release it to a pool of people and engage the expense of that. But yes, it is coming soon. That was a little sneak peek. Platinum users will have access to it first, but our intention is to release it to everybody, as soon as possible. Um, and of course, if you want to join the platinum community or the kind of have access to the platinum stuff, then please, by all means, just email support and we'll get you set up with that. But we'll try to release it to everyone as soon as possible.
Beautiful. And Ophir mentioned in community this morning, besides the fact that it'll be released shortly, that he's planning to do a webinar on it. So
Yep,
uh,
that's
that
that's what
that
I
should
hear
be
as well.
good. So there are two components to this addition. One is here's the option expiration you should use, and here's the closest options that meet the the backtest needs. And then there's the other component, which I find more valuable, but that's just me. And that's that all the technical open requirements are still active. So my question to you, since
No, it's
you're
a
the
great question.
CTO, is how often is that component going to be updated, where it's going to let us know that that all the technical open conditions are still active?
Yeah, and so that I can pretty much you're absolutely right. There are two pieces of it. First piece is all technical conditions are met, and the second one is here are the strikes and expirations that would most closely fulfill this order. I can say with 99% certainty, at the very minimum to everyone, we will definitely release the active now portion of it because that just uses stock data. And we already have access to stock data. Everyone already has access to it. And the stock data, um, we are powering it off bats for the most part. We do for certain, indices and that kind of stuff. We do get a separate data feed from SIBO for the VIX, that kind of thing. Um, but it's real time, but it's the bats feed. So it's that data is, bats gets a decent amount of the volume in the market now. So the prices are normally pretty close. There's not normally a big difference in price between in the stocks how they trade on the bats versus everything else. Uh, but yeah, that every time you send it a back test in it, you should be getting a fresh price. It gets cashed on the back end maybe for 5 minutes or something like that potentially. But yeah, it should be pretty current.
So how late, like, will you be updating at 3:45 in the trading
Yeah.
day, New York
In
time?
fact, not only that, but yeah, we're specifically if we have the data, caching is like if it takes we cache the data just to make the backtest faster. So it'll be cached for a few minutes, just so if a lot of people send in the same thing, we give the result fast. We don't have to wait for the response. But specifically at 15 minutes before the close, if there's anything cached, we will clear it so that we'll make sure to give you a fresh price. So basically everything from at the end of the market should be uncached, so you get the most current price. So
Well,
it'll be live as of the bats, as live as the bats is.
so basically what someone has to do is they have to click on a different test length or just click on the test length that they want, even if it's already being displayed in a tab, just so it updates, right?
That one, yeah. In fact, yeah, test length is fine. But this feature will actually, I'll pull one up in our test environment here. Actually, I can pull it up in production now because I have it on my own version. So I'll share my screen real quick. Yeah, so for like the CMG trade today. So this one shows today as the end date, but it says triggered and it says exactly when it was triggered. But yeah, if you want to see it again, I can actually just click this call button and it'll just go again, and that will get fresh, especially at the end of the day. We will not cache the data at all. So this says as of 12:24 p.m. Um, yeah, what's interesting, this is a small note, but in this shows one loss, but that's because it's actually now placing the options trade live today, and the only loss there is the commission. Um, so let me there's a little quirk here. This trade date I have an update for us hasn't been published yet, but it shows a $2 P&L loss because that's just the commission on the trade. So I just bring everyone's attention to that. So if it's like, hey, this was 6-0, why is it 6-1? That little $2 loss is just the commissions.
Yeah.
If I
Right.
actually get rid of the per contract fee and make that zero, in theory, it should, you know, go away if it doesn't cash. Okay,
Yeah.
now I'm back to 6-0.
Yeah.
But I'll just
Beautiful.
bring people's attention to that. Yeah. So,
Yeah.
but this triggered piece uh, will show all the time. Yeah. And if you click any button, it would refresh. So yeah, if you wanted
Okay.
to sit there and watch it refreshing, you can absolutely do that.
Yeah.
This is the stock above, and I looked at this earlier today too, but the stock was like, you know, way above the 50-day moving average. So I wasn't worried about it dropping. You
Yeah. Yeah.
know.
I wasn't questioning your trading
Oh yeah.
skills. I was
No, no,
just
no, totally.
curious how you
No, but
would
I
react.
do. if the stock was right here, I'd probably be, I probably would not have placed it in the morning. I probably would have waited
Right.
to later in the day.
And I noticed yesterday that if that comma wasn't there after CMG, you'd see the alert, that little extra information under each of the 5 boxes.
You would not for a portfolio backtest, but everything on this screen. And the reason
Right.
is so that it does it one each individually because one, the options are different. So when you click show options, it'll be different. So it says that it's not active for Meta, it's not active for Google. But if I just did CMG, then it'll show 60 delta, 50 delta, 40 delta. And each one of these things has different strikes, 2280, 2335, 2390, etc. So that's why they're kind of run independently.
Beautiful. That's a great addition. Can't wait.
Yeah, thanks. I think we're pretty excited about it. We think it's going to make the product a lot easier, just faster and just like less, demand on people's up higher brain functions. Let them focus on the trade more than trying to figure out like, okay, well, what's the expiration that's after earnings and all that kind of stuff.
Okay. Another question about what we just talked about. So I'm confident we answered that. Can you explain what you consider liquidity bid ask, open interest? FTNT today looks poor on both open interest and widespread. Um, I can tell you that I don't I don't really look at open interest. I just look at the bid ask spread.
Yeah, to that, is my screen still visible to everybody?
Yes, it's showing
Yeah, so
CMG.
so this is the open interest on this trade, and you can see that it's like 0 and 1 contracts of open interest all the way down here. And the 52 or the 2380 strike, there was 2 contracts of open interest. At the end of the day, it'll go up because I just traded one. Um, but yeah, that was not a big factor for me in terms of I still got a mid-market fill. The fact that what the open interest was like doesn't tell you that much. You can interpret an open interest sometimes if you think people are super short or if it's a hard to borrow stock and there's huge puts and that kind of stuff, you might be able to interpret, hey, there's a bunch of people that have a bunch of in the money puts because there's huge open interest and these like deep in the money puts and people might start unloading those close to expiration or things. There are some conclusions you can try to draw from open interest, but I think most of us would caution you from trying to infer that a stock is liquid or illiquid based off of the open interest. I think that's, if there's huge open interest, it probably says something about the liquidity. But you can have a 5,000 lot trade on a floor where someone walks down to the floor and asks the people on the floor like, "Hey, who can do a 5,000 lot in this thing?" And they all break it up and they all do 1,000 contracts a piece. But it didn't even ever go through a normal market, and they kind of had a negotiated price, But it still could be very illiquid. So open interest can be a little bit more complicated and a little more deceptive than you might think.
Okay. So just the gentleman was referring to a specific stock, FTNT. While you were speaking, I looked at it on my trading platform. It's a $64 stock. So what I would consider a liquid bid ask is anything between 5 ticks wide to 9 or 10 ticks wide. That would be liquid enough for me to consider taking a trade in that underlying.
Yeah, and I made you co-host too. So at any point, if you want to share your screen, you're welcome to, Max.
Okay, even though I was unable to find a light background, which I do apologize for, that works, but I went with a little more subdued um, instead of just stark black. It's now aquatic, so it might blend in more. Uh, but we can test that out at another time.
Sounds good.
All right. What does the blue line indicate? I don't know what this is referring to.
I think maybe you mean on the P&L chart for Thinkorswim, the little dotted blue line.
Oh, well,
Uh, I can
that
share my
was
screen again.
okay. Sorry about that.
That's no problem. Yeah, so this dotted blue line is what the value of the option would be at various prices. So this shows if Chipotle goes down to 1900, this shows if it goes up to 2700. The blue line is the value of the option as of today. So it's saying like this is the current price, and so
Right.
as it goes up in time, or that's like the strike. So as it goes up in time, this is showing what the value would be. Without hovering over it and seeing the tooltips, it's a little harder to read because they just don't have a ton of information here. Um, but yeah, they're saying like if today it jumped up to the actual, this is a 40 delta call, so it's a little bit out of the money, but jumped up so that this strike, if the stock jumped up to 2380, making this an at the money call, then the stock, that'd be a pretty decent up move for the stock. And in the position, the P&L in the position would be like up $5,000
Yeah.
as
So
of today.
the red and the blue, the red and the green areas and those lines associated with it, those are the expiration areas. Those are the expiration lines.
Yeah, it's the
Um,
value at expiration, which is essentially,
right,
which is also the same as the intrinsic. Because at expiration, all that's left in the option is the intrinsic value.
right,
This dotted blue line is the real value as of this date at these various price points. Assuming they're assuming the volatility is staying the same. I think it had a 36 fall for this. So it's saying with the volatility where it is, if no time passed, but the stock jumped up to 2380, then this would be the new, then your P&L would shift by $5,000 in the positive direction. But by expiration, you'd be at zero because that you'd still have no intrinsic value. So this value, this line here, this is your P&L, the profit and loss going up and down this side. So at expiration, if stock is at 2380, then the ability to buy stock at 2380 has no value because you can just do that on your own. But if it was there today, then your position would be worth a little bit more than, it'd be worth $6,000 more. There's be $6,000 of time value in that option, basically. If that makes sense. And then at time passes, if you're only a week left, then that time value, stock's at the same price here in the scenario, 2380. The time value here would only be $1,000 or $2,000 because right now we have a month, but in this scenario, because I moved the clock, the timer forward, the calendar forward, there'd only be a week, and that would be the remaining time value. So again, it's the difference between the intrinsic and then the time, the premium, the current value with the premium involved in
right.
it.
So these charts are coming from your trading software. It's
Yeah,
not
just
part,
Thinkorswim's web tool.
right. It's not part of the back tester.
Nope.
And I would suggest that the theta decay is going to be quite limited until after the earnings are announced on February 6th. So that graph may not be as accurate as they would like you to think it is because of the earnings event coming up on February 6th.
Yeah, what that will look like is you'll see the vol tick up. Because there's a certain amount of movement. Like if there's an option that's expiring, the next, day, one day after earnings, that vol on that option might look like a 2000 because they're not trying to price it off the vol. They're pricing it off of how much they think the stock could move. So if they think the stock's going to go up or down potentially $50 on earnings, that option is going to have that. It's going to be worth $50 or $60. So the volatility calculation will not make sense. Because the models would be like, oh, okay, in that case, it's going to have an annualized volatility of 6,280%. You can look at it that way. What the traders are saying is they think it could go up or down $50 on earnings.
Gotcha. Stock BA shows up in bearish bursts, 281% return, and long strangle, 135% return. Would you select a higher return? Well, I would look at each one. I would call up the back test for each one. I would update that last date to make sure we're using today's date as the end date. And I personally look at 3, 2, and 1 year test lengths. I know Ophir looks at 3 year and 6 month. He mentioned in a recent Zoom. So I've added the six. I now look at the 6 month as well and see how well these returns hold up. I mean, maybe the long strangle at 3 years is only 135, but down at 1 year, it's 47, whereas the bearish burst at the 1 year is 0.5. And then that'll help me determine which one I'm going to take.
Yeah, absolutely.
Uh,
Another piece of it is, do you have an opinion about, the direction of the market right now? Or is your overall position, are you leaning really long or really short, and do you want to balance that out a little bit more? Because these bearish bursts, will be a put spread or just a long put actually. And so yeah, so this one you're going to be leaning a little bit shorter, so that might be a better way to manage your risk. Ophir on his 140 trades thing, he balanced out his position, so he has some that do well in if the market's going down, some that do well when the market's going up, some do well when the market goes sideways. So the strangle is going to be a little bit more neutral on the market, up or down as a whole. It's going to want volatility in BA, and this one is going to be hoping for it to move downward. So you can factor that into your overall, like, feel like you're leaning too long or too short. So that's another way to factor it in.
yep. Um, when it says close 1 day before earnings, let's say earnings are Thursday after the close. So must we exit on Thursday or on Wednesday?
It's a
I
good
think
question.
I think 1 day before means you're exiting by the end of the day on Wednesday,
Yep. That
regardless of whether the earnings that are happening the next day are BMO before market opens or AMC after market closes.
Yep.
All right. Today suggests pre-earnings trade. Not sure what that means, but there are several pre-earning trades on the Today tab
Yep. So
for you
here's
to look
pre-earnings
at.
diagonals, pre-earnings
Right.
calls,
14
pre-earnings, yeah,
day,
3 day, 7 day.
7 day, 3 day. All right. Someone just executed the CMG 2370, 2380, 2390 call fly. 10 points wide for a debit of 80 cents. It's an interesting trade, but we're 14 days away from the event, and it's a tight fly, given that it's a $2,300 stock. So the probability of success is not going to be that high for a $10 wide fly 14 days away, in my opinion.
Yep. You're kind of trying to pin the tail on the donkey, but hey, that's cheap. So
Yeah,
your
yeah.
risk reward might be good. I mean, your chance of losing 100% is probably pretty high, but your chance you know, of making 1,000% is probably,
Okay. I see you have 2 minutes to go, so I'm looking for questions where
yep, sounds good.
uh do you have any trade machine introduction and initial setup sessions for beginners? Yes, look in the Learn tab on Trade Machine,
So I click
and
learn tab, getting started, and then, yep, like here's like kind of the video manual, how to use alerts. So these are some really great like introductions.
here's an issue I had with the green-gray validation banner. All right, it's not in production yet. So if the person clicked on 3 year time length to make sure that the end date was correct, and the additional information went away. Same thing happened with me. It only stayed up for the first iteration of the displaying of the tile. When you
Okay.
changed the time period or made sure that the end date was today's date, it went away. I just assumed that's an in-process thing.
Yeah, that shouldn't be the case when it goes to production. We also just removed it in the middle of the day as a feature.
Right.
So, but yeah,
All
we'll double
right.
check that just in case. I haven't seen that personally in my own use of it, but I can double check that. Sometimes it looks like it goes away. It actually runs a separate test after the tile comes in. And so it might take 20 seconds if there's not cache data. So just you can also give it a second because sometimes it takes a
Yeah,
little
yeah.
bit of time to process.
I gave it adequate time. I just left it
Okay.
there for 5, 10
Okay.
minutes and
Okay. It might have,
just to
was
make
that right
sure.
when we pulled the feature potentially or no? Anyway,
Oh,
we'll look at it.
yeah, no, it was there the first time and it was right.
Sure. I'm just saying
Okay,
we pulled we permissioned it in the middle of the day, so it was no longer accessible to people. So, but anyway,
good.
we'll
Gotcha.
have a look.
Hi Max, where can I locate the CMG spread trade? It's in the community. Um,
So here's community. So for people that are new, you click community.
Thank you.
You can click read the terms, make sure you agree, but basically, treat everyone well is our
We're only seeing your face right now.
well, okay. Yeah, reshare that. I was gonna turn it over to you. So you click community, which is this little tab here. And then when you sign in, it's the code of conduct, which just says basically treat everyone well. Don't talk about politics, please. Um, yeah. And then,
There should be.
oh yeah, sorry,
Oh
that's
yeah,
CML Pro because I have
yeah.
access to both tools.
Um, it should be under Mad Dog. Not that I'm Mad Dog, but he was the one who introduced the subject of CMG.
Okay.
I can find it.
Yeah.
Anyway, it's in the
Is it?
community. I'll repost it after this is over. Um, Jason, it's 2:42. You're 2 minutes
Yeah.
late, man.
Yep. I have to take
So,
off here.
so
Last question.
turn it over to me if you like.
Good. Yep. I tried to make you a co-host. Are you able to grab it?
Um, see, share screen. This will stop the other screen sharing. Yes.
Here, I'll stop share.
And okay, share. Okay.
Great. All right. I have to jump off, but thanks for taking over, Max, and thanks everyone for being here.
All right. And thank you, Jason. Okay, so let me see. I guess I have to move this out of the way a little bit. I'm not very proficient with using the Zoom, so you'll have to forgive me. Um, Here's the CMG long call spread. Uh, let's see if I can scroll this down. Okay, so we're looking at 3-year time length and the 40-20 call spread, the 30-10 call spread, and the 20-10 call spread are all 6-0. And it has a very good percent return, as well as if you wanted to do the 50-30. And if you look at the amount risked, you'll see that it's lower than just going with the long call. And you're not going to see the 30-10, but if you look at the 20-10, you'll see that it's only risking, and this is a very conservative number, which is the way CML calculates the risk. Uh, it's only risking $4,480 over the 3-year time period. If we click on 2-year, it holds up very well, still 4-0, nice return numbers, and 1 year, same thing. Down to 3-0, 3 wins, no losses. But the link to this back test is in community. I'll repost it at 3 o'clock when we get back there. All right, next question. I've seen trades trigger in the morning after earnings. Earnings were announced after yesterday's close. And because of dramatic movements, the conditions triggered an alert. But if that trade has the condition never trade earnings, doesn't that mean wait 2 days before getting in the trade? So should I ignore those alerts if the condition is never trade earnings? I would count the earnings as the 2 day, if today is Tuesday afternoon. So if there were earnings tonight, the 2 days for me would be Wednesday and Thursday. So I would enter Thursday end of day or Friday morning, wherever you're more comfortable. All right, where do I see how much money trader will be holding from my cash margin account until the option expires? Okay, so TradeMachine uses the most conservative calculation for the amount of money that you will be risking for any individual trade. If we look at the 2010 long call spread for CMG, which once again is a $2,300 stock, over in this case, the 1 year period, the trader is risking approximately $4,500. But the real key is, how is your trading platform defining your risk? They will tell you the buying power required when you want to put the trade on. They'll either call it buying power required or margin required or something along those lines. So the exact number for you is dependent on what trading platform you're using. TradeMachine uses the most conservative number. All right, I gotta move this up. I do not know where Thinkorswim shows the number. All right, someone's recommending some software called, that's free, so it's not really a promotion, Options Strat. I haven't heard of it, but I guess it displays those kind of graphs that that Jason was showing from Thinkorswim. All right, and I believe if I can find it, there were some Q&A questions. So let me see if we've covered those. And let's move them out of the way. Okay. Someone would like to know, in the pre-earnings 14-day diagonal, there are so many trades today. How do you choose which one to act on? So let's see if I can go to the Today tab and move this out of the way. Come on, did not want to do that. So let me minimize it. That's better. All right. So the first thing I do is, you can sort a column. So I would go from high to low to see what the percent returns are. That's one way. And then I start at the top. As long as the win-loss is, in my case, better than 67%, and all these are, this is right at the, CMG is right at the limit here for the diagonal at 66.7 or 67%. What I have been doing lately is, if I see it has an AI component, I immediately go to that one, as long as it's got a good win percentage and total return number. The other thing I do is go back up to the top on the Today tab, and I will minimize the number of alerts that I'm seeing by clicking on the largest 500 stocks. I think it's by capitalization. And that will also minimize the number of tickers that are displayed for a category of alert, like the 14-day diagonal. Okay, Jason, good to hear. When would you get out? I guess that's referring to his CMG long call. I think he's going to get out when he's made a decent percentage of what he paid for that long call. I think he paid a little over $5,000. I'd be surprised if he did not wait until he was at least up 20%. Just me. It's a big ticket, So 20% of 5,000 is $1,000 winner, but I can't speak for Jason. All right, so that's answered. Could you please show a trade with Tesla or Apple? All right, I'm just skipping to get done with that. I already talked about where the CMG spread trade is. It's in community and I'll repost it. So could you please show a trade with Tesla or Apple? Now, let's see if there's anything here. I don't think there's anything on Apple, but all right. So let's look at the 14-day diagonal. Let's load up CMG. And let's make it Tesla. I know Tesla's reporting the end of the day tomorrow, but this is just to show. All right. So what we have here is 14 days pre-earnings, long call diagonal. Tesla is not a good candidate for the long call diagonal. I guess I could even load up Apple as well. All right, Apple is a good candidate. And we see that the date is today's date. That's 3 years. We'll look at 2 years. Apple is now 3-0. Tesla is still losing and has a negative return. I would not do a pre-earnings diagonal 14 days before the Tesla earnings announcement. Tesla still negative. Apple holding up on the 1 year as well, still 2-0 and a nice positive return. And I'm now looking at 6 month as well. Apple did not have any occurrences where the stock was greater than the SMA 50 days. So I hope I've sort of answered your question with a trade on Tesla or Apple. If you have something more specific or more specific kind of trade, just let me know in community and I'll do my best to show you a sample trade. All right. And that's it. I don't see anything else. Just double check. Do you know where Thinkorswim? Max, I think Jason was more conservative. All right, so I guess some people think Jason's going to get out when he makes 500 or so. What does this time period, 6 month, 1 year, 2 year indicate? That is the test length. So when you do a back test, for 2 years, it goes 2 years starting the end date being today's date, back in time 2 years. If you wanted to do a 1 year back test, it'd be 1 year back from today's end date. All right. Max, you covered both Tesla and Apple. Thanks. Okay. All right. We're all done. Thank you all for coming. And we'll see you guys on Thursday. If not, we'll see you on tape. Everyone have a good day. See you in community. I'll be there shortly. Now, how do I log everybody off? Amanda, you still here?
I am. You should have a button that says end meeting.
Aha. Well, it says I can leave, but as a co-host, I don't see anything that ends it.
Try logging off yourself, and if not, I can stop it.
Okay. Thank you, Amanda. It's always a pleasure speaking to you.
Of course. I'll talk to you
Ciao.
soon.
Ciao.